All right, everyone, welcome back for the episode of Carnivore Trades. Today is Tuesday, October 3rd, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here today. So, markets here today, another beat down. So, spiders down about 1.5%, and the triple Qs are down just under 2% here. So that's kind of like the opposite of what we've been seeing lately. Q's finally playing catch up here somewhat to the downside, as lately it's just been kind of like a flight into big tech. And that's been kind of the safety trade right now, which is ironic because typically the common thought process is higher rates is tougher for tech, but those tech companies, at least big tech companies, have a lot of cash, and I guess the thought process that they can hold on to higher rates better. But in any case, and we see the utilities, as we talked about yesterday, taking a big hit. But in any case, playing a little bit of catch up to the downside here today. Q's down 2% over the catalyst today. You see the market, we gap down 1, 2, 3 up. JOLTS number, man, like that was way hotter than expected. I think it was like 9.61 versus 8.85, I think, expected. And then around the same exact time, it was reported that BoJ did some intervention here. Take a look at the yen, dollar yen. Pretty big dump, and we've been talking about that. Are they going to come in and defend this finally? So the yen coming in and getting a little bit of a bid versus the dollar. The dollar kind of stalled out a little bit here today, if we take a look there. So a little bit of a tail candle. We'll see what that does going into tomorrow, but there's a lot to unpack here. Obviously, as soon as that happened, markets took off to the downside and really didn't look back here. We are getting a little bit of short covering. Got about 10 seconds left here in the day, so probably just some short covering into the close. But again, going into last week, what did I say? I banged my fist on the table, said, guys, this ain't a bottom. It's not a bottom. You don't bottom on a gap up. There's the closing bell. But you're not going to bottom on a gap up, and you got to bottom on fear. Do we have that? It's possible. We did just close below this pivot, just so everyone knows. So I think there'll probably be a little bit more downside tomorrow. And it's really obvious at this point, right? I mean, everybody's staring at that 200 moving average. And I got a few things to say about that. So 420 whole round number, and it is a pretty good, support level, right? This is where the spiders broke out. You got the pivot high, 418, kind of 416, 417 right in this area. There's a pivot low candle at 416. You got the 50 week and the 50 week and the 100 week moving average right there. So a lot of support here for the spiders and the 200. They're going to pierce this. So if we go down tomorrow, we're not please don't place your order right here because you're going to get wiped out. I've seen this happen many times. If we go through that 200, it's not going to just stop right here. It's likely going to pierce through it. Sometimes you can even go down and then come up for a few days, and then you go down through it. So just be aware of that. Every amateur is going to have their order right here. At 419, we're at 419.17. They're going to have it at 419.20, I guarantee. So if we are down here tomorrow, I do think it gets pierced. That is the spiders. SPX is actually a little bit farther away. It's 4201.98. So be careful. There's always some games that are in play here with this 200. Another thing I want to talk about before we get into the technicals really quickly, there's a lot of people calling for a low here, and there's bears too, don't get me wrong, but a lot of people are still on that end of year rally train. And while I think we do go up into the end of the year, there's nothing right now to say that we can't pierce this bounce and then go lower. Again, I'm going to bring this up one more time. Look at JNK today. That's down 1%. This should not be down more than 15, 20 basis points in a single day. And you're down, precipitously over the last 3 sessions. Why am I bringing this up? Why does this matter? Well, it could just be, and there's HYG, it could just be the market repricing because of higher yields. There also could be, and I don't like to be alarmist, but there could be a credit meltdown coming. I mean, we see VNQ here. I bring these up for a reason. Take a look. That's a weekly breakdown. I mean, this is, I talk about this every day. Monthly inside bar, real estate investment trust, not in a good spot here. Yes, you have the 200-month moving average, but look what you did. You came down and then you consolidated for a full year. before attacking it. So that has potential to push further. Financials, look at XLF. That's not good. So what I'm seeing like in the credit markets here, it could be nothing. Maybe we bought them today. But right now, I would advise just staying out of the way. And if we get a bottoming signal, like a big tail candle, an engulfing reversal, you just look to play the higher low, right? So if you go back, here's an extreme example, but we'll go back to the pandemic lows. We had this big sell-off. I mean, you could just buy the first pullback, put your stop below the low here. And yeah, you missed the first 200 points, but then look what happened after that, right? Even here with October, you could buy this pullback here, put your stop below the low, or even this one, and you never got taken out. So I see a lot of people trying to get in front of this. Just let the market tell you when it's done. I mean, the reason I'm bringing this up too is if this is real, something's going on here. If the yen gets defended, I know it was taken as a positive the last time, but that was when it bottomed last time. The market bottomed, or I should say topped. But this time it's different because interest rates are much higher. The market last time was under the impression that rates were going to come down, inflation was going to come down, and the Fed was going to engineer this perfect soft landing. It's not really the case right now. If the yen really starts to come back in, kind of like a global margin call, JNK, like this could be telling us something. Somebody's blowing up. I've talked about gold recently. This doesn't just happen for no reason. So my point is, yes, we're oversold. Yes, we're getting close to support, but you can crash from oversold. Just let the market tell you when the bottom's hit. That said, getting into the technicals here, I think if you pierce the 200 tomorrow and we can get some type of a tail or rebound, there is a good chance we put in a short-term, maybe even long-term low, or at least medium-term, I would say. But I think, as I've been saying for pretty much the whole year, again, going back to HYG, you don't have a new bull market with this not performing with the market. And it's just a matter of time before that stuff starts to come up here. But in any case, market's down today, 1.37 on the SPX. We'll look at that 200 tomorrow. Maybe we bounce back, test that trend line. But again, big level for the bulls here, obviously the trend line. But then 43.33, 15, daily close above that, you could get some more upside. But that is the case in the short term. Triple Qs, again, still didn't make a new low, so that is a good sign for the index. But, I mean, there is room to come down here. That is kind of got like, if we flip this, it's got that kind of cup and handle look. So just be aware of that. The Qs could play catch up to the downside. Everybody's piled into big tech, which, yes, it's a safety trade, but now that everybody's piled in with higher interest rates, their valuations just completely screwed now. And we know what happens when everyone piles into the same trade. They all pile out at the same time too. But in any case, Qs coming in. I talked about this level on Twitter and in our Discord. I said it should have good support down here around 3, right into 3, I think it was 354.30. And that basically held by the end of the day. So taking a look there's your pivot from the low, and then we did bounce off of that by the end of the day. A close below here on a weekly close would be a big, gigantic negative for the triple Qs. But right now, they are hanging in there, so we'll leave it at that. Another index that's really oversold is the Russell. And this did come off the lows, but take a look. We sliced that trend line here, and this head and shoulders still in play down to 165. Probably due for a bounce. You have 1, 2, 3 sell-off. So usually you get a bid the next day when that happens. Maybe even comes to back test this trend line soon. But again, Russell getting pounded. And again, small caps not doing well with the higher interest rates. Dow here also getting pounded here through 331.45. There is some daily chart support right here with these pivots, and even weekly with that green bar. However, again, there's a lot of head and shoulders out there. The Dow has one too. And if that plays out, it could take you down to 325, which good support right there. That was kind of a bear pattern, bear wedge look, and then that failed. So that's where institutions should be sitting. That's where I would be looking to play the DIA if we get down there. But right now, slicing pretty good. 1, 2, 3 down. Maybe it gets a bounce tomorrow. Semiconductors down 2 1/4. Again, testing the trend line, testing the 20, and then reversing lower. You don't want to see this pivot taken out, especially on a weekly close. If that happens, semiconductors are in no man's land all the way down to 129. But they are trying to hang on right now. IGV also rolling over as well. Not a great look. Similar kind of setup here to that triple Q pattern, like almost kind of that inverted cup and handle. Maybe even a W bottom. You could make a case you got like an MA starting to form here. Again, I'm talking about tech this way because tech is kind of the downside laggard here if that does play out. And again, this pivot here, can't lose that on a weekly close. Transports here below the 200 moving average. This is something that can happen here. I just mentioned this with the spiders, but a lot of the time you'll pierce it, you'll come up, you'll hit it again, and then, you know, maybe let's say we're down tomorrow, then we can bottom. They play a lot of games around the 200. Be careful with it. They're going to try and flush people out. Everybody's going to stick their order. You know how many people put their order right here for DJT, and they just flushed them out today. So that's kind of what I'm expecting here for the SPX. Doesn't mean it always has to play out that way, but oftentimes it does. If we do finish the week below that 200 MA, it's down to 14K on the DJT. Okay, interest rates here. We'll flip over. So there's the 2-year, again, still holding up really well, no problem. Still has a bullish inside bar on the daily. Never closed below that tail candle low, and above the moving averages. Trend is up. 5-year continuing to push up 4.8. 10-year at 4.8. So they're at parity now, 5s and 10s. And then the 30-year, that probably wants 5%, right? So maybe even a pierce of it. But it is getting really lofty. If this starts to come in, it'll probably help the market stabilize a little bit. But again, higher for longer, right? I've been telling you guys for a long time, yields aren't going to go lower. That doesn't mean they can't come back in. Doesn't mean they can't sell off. But this is kind of the new normal here. But interest rates, will watch that long bond around 5%. It could even get there tomorrow. Another weak sector, XHB, finally cracked. So again, that head and shoulder top there. Again, another head and shoulder, right? A lot of them out there. We can do that to target, even though I didn't do that perfectly. But, you know, I told you guys $70. Look at where that target essentially takes you. Cracked that trend line. I told you guys watch out for that bear flag. And that is slicing through. Now again, they got, you know, it's only Tuesday. We could bounce back up by the end of the week. Got the 200 there. It is a little oversold, but definitely some damage there into the XHB. But 72 should be good support, as I've told you every day here. And then $70 is kind of the bigger level to me. But yeah, nice slice there. For XHB, VNQ, we talked about, you gotta stay above this on a weekly close. You got to get back above that. Otherwise, there is big problems. So if you go to a weekly, I mean, there's nothing to say this doesn't go back to 70, maybe even lower. Again, if real estate investment trusts are blowing up, if commercial real estate's blowing up, you know, why jump in front of this? Just let the market tell you. That's my point. XLF, again, breaking through here. 32 is still good support. Still looking for that. May even get there tomorrow, but we did have a 3-bar sell, so it might bounce first, but XLF in tough shape. KRE, got to hold 40. Otherwise, that is in big trouble. KBE, this is in trouble too, probably down to about 34. You have a little bit of support here at 35 with that pivot, but I think 34 is the bigger level there. KBWB, that looks like it wants 35, maybe even double bottom. So large banks in trouble too. Broker dealers, big time slice. So been a while since I've gotten one of these levels wrong on XPD. I'm usually very good, but sliced all the way through that 200. You know, next big level is probably about 460. So pretty good dump there on the XPD. Ever since that trend line broke, we've gone right back down, but right in this area should be decent support, 460, 462. Crude finished the day up a little bit. Nothing crazy, but pulling back on the 20. I still like that down to 84. Nothing's really changed again. We got a 3-bar sell. 1, 2, 3, and we're pausing. That is totally normal, but I still think this gets down into that area. XLE held up really well, only down 6 cents. Holding that 88 handle, I talked about that yesterday. We'll see what kind of pattern it puts in. I still think 85 is a much better level. XOP trying to hang in there as well. Still looking at 135, and then OIH managing to scratch out a gain up 1.1, or excuse me, up $1.18. Again, this could still, just return to the 20-week moving average and put in a higher low. My only problem with it is you didn't really build supports on this big push up, but it is holding up okay. CCJ coming in. We'll see what that does by the end of the week. Above 37.50 would be bullish short term. Below it would be bearish. URNM testing the 20 moving average. That may get a bounce here. In fact, if you're really aggressive, you can play this right now with a stop below the low. And what you would look for here is a 50% retrace. So look for about 46.70. Again, this is a really aggressive, but that is a good drop and pop setup with the 20 moving average. That could play out nicely given the 3-bar sell. Again, aggressive, very aggressive play. Nat gas holding up 10 cents, so reversed all of yesterday's losses. I don't know, it's tightening up here. So again, weekly chart. You close above this white line, it's in squeeze mode. I think they faked everybody out potentially today and yesterday, right? The gap fill, right? They've done it every time. You slice that gap window and then pop. So we'll see if that plays out. But yeah, nat gas getting a bid. Dollar index, we talked about stalling out around 107. There may be we got to see follow through here, but the dollar may have, again, the yen trade, if that's intervened with, may have put in a little bit of a top, but we'll see. I mean, I'm not betting against it because that monthly trend is very strong. But you are coming into weekly resistance, so we'll have to see how it closes out the week. But dollar did come back in. Gold here. So we talked about this level, 1825. I told you guys about that for 6 months. And low of the day was 1830, spot 9. And it came off the lows here. Gold is very oversold. It does need to bounce. But you did close the week below this green bar. I don't like that. And on the monthly, your positive is that you're above this green bar low. If this gets taken out on a monthly close, gold's done. It's going to have a big sell. And you guys are probably going to fight me on this, but I'm telling you, that's what's going to happen. Silver, on the other hand, what have I been telling you guys for how many months now? 21. Yes, I did pick up silver today. Full disclosure. This could still go lower, but this is a really good support level for silver, and I like the level here. So we'll see what it does. If it goes lower, I already have another level worked out. Members know about it. And this is a physical level as well. So I repeat, physical silver can be bought here. I do not like the miners yet, but I do like this level here very much on silver futures. I've been talking about it for a long time. Platinum, still got to go a little bit lower. Palladium, hopefully this can go lower. It's looking like it's getting ready. And then copper also coming in. So again, below that wedge again. On the weekly, you get a weekly close about below that. Again, it's down to 340. All right, Bitcoin here. So that's still hanging in there. So good pullback yesterday, though, after we touched that trend line. And then an inside bar. So if this can firm up and put in an inside bar, it is fine. You don't want to see it close below this neckline here. That's an inverse head and shoulders. Target is 30,000. If you close below that, it has failed, and then it's definitely going to be on the weaker side. I would give it more of a bear bias, but right now it's holding up, and we'll leave it at that. Again, lastly here, let's see what we get tomorrow. I'm just curious. Futures are hanging in there. Okay, not really doing a whole lot. By the way, nice little inside bar action on the futures. Down move, 1, 2, 3, 4, and a continuation. But yeah, again, tomorrow, everybody's gonna look at this 200 moving average. Don't buy it. Like, at least if you're gonna buy it, put your order way down here, and we'll see what kind of move we get. I do think we are getting close to some type of a bounce, regardless of what happens. But Be careful. A lot of people are throwing out that seasonality chart. Oh, the pre-election year, we have to rally in the end of the year. It has to happen. No, it doesn't have to happen, especially when you have the credit market literally melting down in front of you. So don't be arrogant. Nobody really knows what's going to happen. Don't let anybody tell you that they know what's going to happen. They don't. So let the market tell you. If we get a buy signal and you miss the initial move, that's fine. There's always going to be a pullback that you can buy, but we don't need to get out in front of it until the market really gives us that signal, and I don't think we have it yet. But anyways, guys, I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.